All right. My name is Dave Wozniak. I'm Chief Market Strategist at Trading Floor Research. And today's topic, as Steve said, is primary breakouts, PBOs. And so let's just get started right in. Here's what we're going to cover. I'm going to define a primary breakout. We're going to talk about the components of a primary breakout, and then I'm going to have, we're going to show some application with some examples at the end. So the first thing, even before we start defining it, why? Why do I even want to talk about primary breakouts? Why, what's the significance here? And the thing I have to tell you is in my, for almost 34 years of doing this now, the thing that I have found when I go back over my trades is that the biggest and best returns that I have gotten over the years have come from primary breakouts. And to the extent that if, somebody said to me that I could only have one system of, be able to trade one thing of all the different areas I trade, what would I choose? And I would choose primary breakouts. That's how significant the returns have been over everything else. And not to say returns haven't been good in other areas, but primary breakouts are just unbelievable. So that's why I want to talk about them today. And so let's go ahead and define what I term a primary breakout. And of course, a primary breakout occurs when an initial public offering or an IPO breaks out of its first, and here's the key right here, well-formed base. So what do I mean by a well-formed base? Well, there's three areas that I really focus on in a well-formed base. The first is not a must, but it increases the probability of success that the market is in a confirmed buy. And again, that's not a must, and we're going to see examples this year where I traded primary breakouts and put them in the newsletter, and the market was not in a confirmed buy, of course. We haven't spent much time this year in market confirmed buys, but the primary breakouts did work. And so the whole thing is especially in markets that we're in right now, is that to me, it comes always down to probability of success and probabilities. So even if the market is not with me or different things don't quite get where I want them to go, I'm still going to maybe take the trade, but I'm going to lower again my asset allocation to it. I'm going to make some adjustments in what I'm doing. Now, the second area that is a well-formed base for me is a must. This one is a must. The industry group is in a buy signal. That is a condition that has to be met. The third one, the IPO is under accumulation. Again, this is a must. And we're going to cover both of these as we go through today. It's in an accumulation, and it also is forming a proper base, whether it's a cup and handle, a double bottom, even if, whatever the base is, I have to determine that this is a properly forming base. And there's a couple of keys that I use in order to really get that across. And so we're going to be talking about that as this goes on here today too. So let's first start out with a couple of examples. Again, there's so many examples I could give. I traded Tesla coming out of a primary base, and actually that primary base was what I like to call a coiled spring. I traded Facebook coming out of it, which Facebook was a gap up in the $30 area. But Chipotle was another example. And I'm just showing a couple of examples here to kind of get the point across, because there's a couple of things that are, very that I do not have to have it exact in doing this. And one of them is the length of time it takes for a primary base. In this particular example, of course, the IPO came, rallied up, very typical with IPOs. And again, in my primary base, I don't care about the IPO when it comes the day it comes to market. I don't care about that. I care about, from that point on, how is that base forming? What is going on with that? And very typical, you're going to get a run up, and then you're going to get a decline that a lot of times will look like a cup with a handle type formation. In this particular case with Chipotle, you had a breakaway gap and started running away with this thing. A key that we're going to talk about as we go on with this too, again, that works into a well-formed base, is the idea that the handle, or when I'm purchasing this potential primary breakout, always one of the keys is it has to be trading above 50% of the range. Why is that? I've said this numerous times in webinars and everything else in classes. This is a big thing for me, is above 50% of that base, the bulls are in control. Below 50%, the bears are in control. And for the bulls to take control from the bears, it takes a lot. There's always a war that goes around along 50%. And so in this particular case, this base took about 1.5 years to form, the primary base. And that's kind of typical. Facebook, Tesla took about 2 years. Facebook, it's very typical that they take that long. Now, once they do break, I mean, Chipotle was a fantastic example. If you hung on long enough, that was about a 5,800% return. One of the key things that I'm going to talk about too is what I look at in determining how far I'm going to ride a primary breakout. And one of the big things is I use trend lines, and where trend lines cross at key Fibonacci areas, those are areas that I point to. And actually, I use this in all my analysis to get ideas where I'm going to exit. But in primary breakouts, it's the same type of idea. And again, you could see how this thing was just bouncing beautifully on its Fibonacci numbers that I set up. And then you got a second base in here that you took off from. What's really interesting is, to me, when I have a major trend line like this that goes through the chart and we break out the top, typically this is where your chart will go parabolic, and also typically works as the top, a really, really significant top in the move. And that's why I think Chipotle may have hit a very significant top at this point. We've come back down through a very significant number and actually threw back into the trend line and that significant number at this point. So we'll see where Chipotle goes from here. But again, these, just buying the primary breakout and letting these things go to the key numbers. Here's another one, Alibaba. Alibaba actually took almost 2.5 years to form its primary breakout. And again, I didn't care about the IPO itself. It just, you see these and look at how beautifully it formed right at 50%, that handle. The bulls stayed in control. And once it broke, in about 11 months, you had 102% return. If you held it into the second base and bought it out of that again, in 3 years, you ended up with about 204%. And again, rallied right up to its key number up there before it let go. So those are just some examples of a couple primary breakouts that I've actually traded. Again, there's so many more, and again, the returns have just been incredible. But for me, like with everything that I do in technical analysis, It's very, very exact what I'm looking for in a primary breakout, and it really has to fit certain parameters before I'm going to trade it. So in other words, just because something is setting up in a cup and handle doesn't necessarily mean I'm going to go chasing this thing. And I'm going to give you an example of one that I just recently put in the newsletter, that the first attempt this stock actually took in breaking out was a failed breakout because it didn't meet my strict parameters. And so I'm even going to show that to you too. But here's 3 components of a primary breakout that really do need to be met at this point. And number 1, again, I need a buy signal from the industry group and a buy signal from the IPO itself that I'm looking at. That's number 1. We're going to cover that. Number 2, I need to see that accumulation in the base as it forms. I need to see shares being accumulated by big money. And number 3, I need to see a well-structured base. How do I determine that well-structured base? I use what are called Gann grids, and I break the base up into 1/8 numbers. And those 1/8 numbers tell me so much information of what I need to know as this IPO is setting up in this base. So we're going to cover all 3 of these. The first one, the buy signal of the industry group and the buy signal of the IPO itself. And so again, I need that confirmation from the industry group. And again, it's nice to have that additional confirmation of the market. And a lot of times the market, when it's just turning down and you're getting confirmation of an IPO breaking out, typically that's a very good time to really step back. And especially if the group isn't giving you a buy signal too. The IPO that is setting up in the first stage base has to be in an industry group that's giving you a buy signal. And what do I mean by a buy signal? Well, Steve teed this one up pretty good for me here today because one of the rules, I have 5 factors in what I call my early entry system. And number 1 factor in my early entry system is Ghanchian's four-week rule. Now, one thing that I have to point out to you though, and again, I'm really not going to go in depth in these. You can actually see, I've done another webinar with Steve that you could actually see where I talk more in depth in the early entry system. But these are the factors that play into when I say I'm getting a buy signal in the IPO and I'm getting a buy signal in the industry group. It is the early entry system. One of the things though with the Ghanchian rule for me, when I was back testing this many years ago to put this into my system as a portfolio manager, when I was using this, one thing that I learned in back testing this is Ghanchian's original rule was that price, as you see with Steve's chart, price just needs to break the upper channel. That's Ghanchian's rule. What I found was in order to increase the probability of success, and again, it's all about increasing the probability of success. What I actually found was if price closes at a 20-day high, it immediately increases the probability of success. Now, again, the other things that are increasing the probability of success is volume. When this is making a 20-day closing high, I need to see confirmation of volume, above average volume. I also need to see trend already playing in place. I use proper order of moving averages, and I also use trend lines, which we're going to talk a little bit about today. And the other thing is again, I use these Fibonacci numbers to make sure the base is properly put together, and I use Fibonacci expansions to get better exit points. And we're going to talk a little bit about that today too. So back to the idea of a group then. So, and again, these were examples of industry groups earlier this year. And by the way, coal, I've already pointed out in my newsletter already, that's been in a buy signal for the past few weeks already again. Coal has just been a monster here. But I'm going to use this coal example again. The industry group gave a buy signal on January 12th. Okay, the market, and here's the key, the market was in a sell signal. Now, again, that lowers my probability of success. I have to take that into account in my trade, that my probability of success might be lower because the market is in a sell signal. But a great buy signal using my early entry system, you can see the volume, price, breaking the trend line, proper order of moving averages, everything was in place. And by the way, then the group gave a beautiful throwback into the trend line and took off from there. But the idea here is the group gave a buy signal on January 12th, earlier this year. Immediately, what I'm always going to do, because again, my best success always comes from IPOs breaking out of basis. When I get a buy signal in an industry group or a sector, I'm immediately going to look for the IPO. That's going to be, for the IPO that's set up in a base. And if that is what is giving me the best accumulation and everything else, that's where I'm going to focus my effort. In this particular case, one of them that went into the newsletter was AMR, Alpha Metallurgical Resources. And this was actually, I didn't put the full chart over here. You might see it in another chart I give. No, you won't actually. But this actually came in around 2017 or so, went pretty flat, traded up to its high around 2018, formed a cup, a handle. And what was interesting was in the handle, it actually formed a cup and a handle and then took the whole thing out. When did it take it out? Well, took it out just after we were getting our buy signal in the industry group. So here we go. We've got our buy signal in the industry group. This stock gives me the buy signal. And what do we get? In a market that is declining, in 24 trading days, a little more than a month, we get an 81% return on this thing, right up to my Fibonacci target area of 126, coming right in. Actually, after it pulled back from there, it even went further at that point, but that was pretty much my trade, right out of, a primary breakout in a horrible market. Another example, looking at earlier this year, looking at the oil and gas exploration and production industry group. Same type of idea. We got a buy signal in the group, perfect buy signal. That buy signal came really close to the beginning of the year, in January of 2022. And this primary breakout stock actually didn't even give the opportunity until about a month later. But Indonesia Energy, look at this thing. It just came into a great base. Once it broke out of the base, 670% in 2 weeks on this thing. And again, this is the power of primary breakouts. This was a horrible market in February. But you know what? The group was there and the stock gave it to you. And again, this is the power of putting those two ideas together. We need to get the buy signal in the group, and we need to get the buy signal in the IPO itself, the IPO that's setting up in that primary base. The second component is I need to see accumulation in that base as the base forms. Now, again, I'm getting my final signal of big volume with my 20-day closing high, my Danshan rule with big volume. That's the spark that starts the fire. But the kindling underneath that fire, the accumulation, has to be happening during that whole formation of the base. So how do I see that? Well, I need to see, again, that accumulation. As the IPO is setting up in its first stage base, I need to identify that big money accumulating of the stock shares. And how I do that? is what's called up-down volume ratio. I'm always referring to this in my newsletter. It is unbelievably important to me in identifying when big volume is entering the picture in these different in whatever I'm buying, whether it's an industry, looking at the industry group, whether it's looking at the sector. As I pointed out this past week, one of the most distinctive things that I'm seeing in I can't think of it now. The consumer discretionary group in our sector, and what's really making it very, very intriguing right now, and pointing it to a leadership category right now, is the fact that it's one of the biggest up-down volume ratios right now in all the sectors that I follow. And this is finally overtaken even energy. Energy the whole year was the biggest up-down volume ratio that I was seeing. And that's what really kept energy at the top. Now, consumer discretionary has taken over as the biggest area right now. I'm sorry, it's consumer defensive is what I want to say. So anyway, what is this up-down volume ratio? And I know I've talked about it before because it is very, very important. What makes this so important is that this ratio looks over the past 50 trading days, basically about 2.5 months. And what you're doing is you're taking the upside volume over the past 50 days and dividing it by the downside volume over the past 50 days. So if you've got an up day with whatever volume's associated with that, that goes on the numerator. And if you've got a down day with whatever is associated with that down day in volume, that goes in the denominator. And why it's important for 50 days, or I feel it's important, is again, institutions don't typically buy everything they want to buy in one day. They're buying over a certain amount of weeks or days, and they're putting these positions together very slowly so they don't influence the market. And one of the best ways to pick up on that institutional flow that I've found is using this up-down volume ratio. So when the ratio is greater than 1, that's telling me we've got accumulation. When it's less than 1, in other words, the denominator is greater than the numerator, we've got distribution. And so this is a key for me. And this is how, when this base is forming, the IPO base, this is what I want to be looking at. So let's go back to my example of AMR. All right. As AMR was forming, here's my up-down volume ratio. And in this particular case, what I even really put in there in my charting is I put the Donchian channels for 100. When up-down is breaking 100-day highs, it is very, very significant to me. This is telling me not only are we trading above 1, at this point, when this base was starting to form and coming up the right side of that cup, what we were seeing was we were seeing up-down between 1.5 and 2, but it was also breaking to new highs. Comes back, again, takes out 2 as this thing is coming into the last turn of putting in that handle. And then we settle out in that handle. But as this handle is starting to break, what happens? You get that confirmation again, and this sucker's off to the races. That is what's telling me, not only, again, I'm getting my signal of when I'm supposed to be buying this thing, but in addition to that signal, I'm seeing confirmation of true institutional, true big money buying into these stocks. And that's what I want to see. Here's an interesting one, and this is a point I want to bring out with this, where one of the factors for me also is the idea that it doesn't matter how long the base is or when the base comes after the IPO. I'm scanning these stocks and always watching these stocks for whenever they set up in potential primary breakout bases. And what's interesting is this one happened earlier this year. And it was one that I actually picked up for myself. But what you're going to notice, here's the key on this. This is not a daily chart. Here's when it IPO'd. And this is a 30-minute chart. So each one of these bars, of course, represent 30 minutes of trading. And look at this, though. Here's your cup. Here's your handle forming right here. I always want to know 50% of that base. Where did the bulls start to take control of this base? And when I got a buy signal on this, right above 23, in the 23 to 25 range, I picked up some shares of this thing. Now, the bad news, well, the good news for me was it was in a matter of really another day or so when it achieved about, my second target was at 65, and that's where I actually took it off in a very quick period of time. And I thought, wow, that's pretty good. I mean, because this was a bad market at the time. And this was, in a bad market to get that kind of a return, I thought I was doing pretty good. The only bad news on that was if I would have held it for a couple more days, I actually would have gotten over $2,400 off of this trade. This is the power of these primary breakouts. This is what I'm talking about here when you identify these things. So this little mistake of not holding it long enough, and again, it was only a matter of holding it a few more days, would have gotten me definitely the trade of the year, $2,400 in a matter of days. And but it all begins with a primary breakout. And that's why I'm talking about this. This is powerful, powerful stuff. This is, I give these type of things in my newsletter too, which we're going to talk about one that is currently in the newsletter here in just a bit. The Gann grids is number 3. A primary breakout, the third component that I'm looking at in a primary breakout is that the chart is set up properly. And how do I know it's set up properly? I break my chart up into 8s. So in other words, they're called Gann grids. And I go from 0, 1/8, a quarter, 3/8, a half, 5/8, 3/4, 7/8, and 1. And each one of these 8s represent a certain degree of strength and a certain degree of weakness. Let me just first start out by saying this, and again, I've already said this here today, but it is so important. The strongest numbers in this grid are a half, 0, and 1. And the focus here always has to be on a half. That, again, is where the bears and bulls take control from each other. The second strongest area is a quarter and 3/4. And the weakest is an 1/8 and 7/8. Knowing that and now putting that into the structure of a base makes this base so much more understandable. So let's look at a stock that I actually just recently put in the newsletter and was a buy here. But what's interesting is that buy has come off of this cup and handle that has started to form on this. What I didn't go with, if you can see this was, okay, so here's the stock rallying up, forms its first cup and its handle. And it to the blind eye, it looks pretty darn good. I mean, you've got what looks like the potential for a primary breakout on this thing. So why didn't it work? Well, this is as much good information as anything else. And it goes back to these rules. that I've talked about. So, you know, and what I've found on these kind of things though too is when you get a failed breakout or a broken pattern, and you come up and set up for a second time, oftentimes it's the second mouse that gets the cheese. So we'll see what happens on that. But right now, let's focus on a couple of things here. December 28th, 2020. All right. Number one, giving December 28th, 2021. That was a big thing against it. But again, that's something I like to see. But you know, I can work with that, but it lessens my probability. The one thing that definitely I can't accept, and we're going to come back to this idea of the broken pattern too. Well, I might as well cover it right now. So the one thing that I do have to tell you, when you do make a mistake and you're buying a primary breakout, typically trend lines are going to tell you right away when you're in trouble off of this. And it's when I determine right away that you've got what's called a broken pattern. And the thing about broken patterns is that they can be more significant in the opposite direction than even the pattern itself that was allowing on the upside. So very important to watch this. And one of the keys for me in determining a broken pattern is to watch when you break that rising trend line that led into that handle from the bottom of the base. Once you break that rising trend line, that determines a broken pattern. In addition to that, you also look what you broke at the same time. You broke the 3/4 number, which was a very strong number. One thing I want to point out here, though, too, this is where my numbers play a big role in what I'm doing here, too. Look at where this move terminated. It terminated at the 8th number, at 1 1/8. Very, very important. Why is that important? This price should have just plowed through that number like it wasn't even there. That is the weakest number. The 8th and 7/8 is the weakest number. Instead, it hit it like a brick wall. That's your first clue that you're going to have problems in a breakout, is when you try to take out an 8th number and you fail at an 8th number. And so that was your first clue. You were put on high alert if you did take that trade. The second one was the broken pattern on January 13th. But let's look why you shouldn't even have considered that pattern in the first place. Was number one, as this was forming up here, look at what was happening to your accumulation, your up-down volume ratio. Not only were you in distribution below 1 at the time, you were breaking 100-day lows, and you stayed down there. Again, accumulation was not there. And what was more significant is, at the time of this breakout, you actually were experiencing distribution. So you got your key off of your Gann grid number. You got another key off of your your up-down volume ratio. And let's go for the third one. The trifecta on this is, let's look at semiconductors, where the stock, or the IPO, the stock is in. You got your first sell signal. Again, using my Donchian rule, you got your first sell signal on December 20th. All right. When was this thing breaking out? It was breaking out on December 28th. You were already in an industry group sell signal. And if you don't like that enough, look at what this sell signal was coming with. In a few days later, we were breaking 100-day lows on the up-down volume ratio, and actually in distribution. Then what do you get? On January 19th, you get a second sell signal. And now we are deep in distribution on this thing. Okay? So it all is coming together, telling you you shouldn't have been taking that trade. That's why it is so key. That's why I find it so key, and that's why I'm so strict with these rules in these primary breakouts. Those are the things I'm looking at. So let's look at the difference now today. Look at your group today. Look at semiconductors today. You actually had 3 buy signals. You've taken out the entire trend line from the December highs. You've taken out this trend line, and this point should not go unnoticed on semiconductors, because I have to tell you, technology itself has not taken out this major trend line. Semiconductors have. You've taken it out, you've thrown back into it. I'm not showing what happened today, but you are right at the top of the range again here today. So you had a buy signal on the 10th, 11th, and 15th that took you into where you're sitting here today. Now, this is a problem. And again, just to acknowledge this, we might have had the buy signals, but here is a little bit of glitch right here in semiconductors, though I still have to tell you, if you look, they are 0.98, slightly in distribution. You might call it neutral, but what I noticed today, this was not, I didn't put today's chart in here at the end of today, but the up-down volume ratio on the group today, even with the upswing, went to a 0.94. So again, this, again, I'm taking the trade, but I'm realizing that, you know what, you got to watch this stuff really, really closely in here, because this is not the perfect signal that I want to see, okay? And again, when we're in better bull markets, you're going to get better perfect signals. But this is just something to be aware of right there. So here's where we are, though, today on this Allegro Micro ALGM. Now we're in, by the way, the up-down volume ratio on Allegro, though, is 2.12. Massive accumulation on this thing. What has this done in terms of the numbers and everything else? Well, here we are. Of course, we had to put in new numbers now again, too, by the way. We're not using the same numbers from before because we hit new lows. But here we are. Here's our cup. Here's our handle. Now, our handle started forming the minute we broke 50% of the range. And by the way, that's when I put it in the newsletter to give the buy. Now, once we got the buy signal, what did we rally up to? Well, we rallied up to a very important Fibonacci number, got held up at 3176. What did they do the past week? Exactly what I'd expect. We throw back into the trend line again. And today we closed back above my 5/8 number, 30.99. We actually end up closing at 31.14, right above my 5/8 number today. So the next thing we got to do is we got to take back that 3176, and these become my target numbers. And we're going to talk a little bit more about this in the next couple of slides about how I determine where the highest probability of target numbers comes in. But we're going to leave that hanging for now. But right now, that's putting it all together for Allegro where I see it right now. And here we are. How high does an IPO go after the breakout? Well, we use it. What I like to use is my Fibonacci expansion numbers and my trend lines, and a nice combination of the two. And of course, I've done a Fibonacci webinar before, but the expansion numbers from the Fibonacci number system, you can basically divide 89 by 55. You're going to get your golden mean, and you're going to get your continue expansion numbers by taking 233 divided by 55. That's going to give you 4.236, on and on, all the way up with your expansion numbers. When you put the combination of the two together, now this was where Beyond Meat, which was another one I traded on the IPO. When Beyond Meat was coming to the end of its line here, you could put a beautiful trend line above price, which you're going to see me do this on a lot of my charts for good reason. Where that typically comes together of where a Fibonacci expansion number is, typically gives you a pretty significant high. And that was the high on Beyond Meat before it really started to collapse. That was around $220 a share. Of course, I think Beyond Meat is in the teens now or something. So, once you hit those areas, it is very, very important. But I got to tell you, getting up to those areas on the primary breakout, again, can lead to very significant returns. So let's go back to our Allegro Microsystems chart again. Now here's what's interesting. Remember that trend line that I used as to determine my broken pattern? I'm still going to use that trend line. Those trend lines come in play. Look where that trend line is taking us right now. That trend line is taking us right up to my Fibonacci expansion number at 49.83. Here's the other significant number right now, taking us beyond my Fibonacci number right here. But where it is kind of crossing right now is also, if you notice these lines, these are Andrew Pitchfork lines that I put in my charts too. And those also work for me as crossing. Where you see those Andrew Pitchfork trend lines crossing my Fibonacci expansion numbers, those will also trigger significant areas where I'm going to highlight where price is going to maybe have a little bit of resistance getting up to those areas. So 38.66 and 49.83 are key numbers that I'm going to be watching as this thing goes. But again, the whole idea here is let's get above 31.76 right now and see where we go from there, okay? Couple real quick examples right here. Some things, this hasn't even gone in the newsletter yet. These are just setting up right now as primary breakouts. This is ESAB Corporation. They make welding machines and things like that. Look at this. Again, here was our IPO, rallied up for a couple of days, came down, formed a beautiful cup. Look at what we've formed over the past week or so. Great handle. Look at how it's forming. Today, we tested again, tested that 50% of the range right here. And we're ready to break this trend line of the handle right now. What makes this significant for me? Well, number one, we got the buy signal in the IPO. On November 16th, as we were taking out that trend, the 50% of the range, look at the buy signal. Look at the volume on that Donchian 20-day high, 4-week rule. Look at the buy signal on that thing with the volume. Big. But more importantly, even, look at my up-down volume ratio on this thing. Look at what up-down is doing right now. It's just a monster. As this thing's going sideways in this handle, look at the accumulation that's coming into this thing right now. This is big. I'm going to be watching this. This one, again, this hasn't even gone in the newsletter yet. This thing looks fantastic right here, okay? Let's look at the group. It's in the Diversified Industrials group. What's the group done? Well, it broke its downtrend line from its November highs. And it's given 2 buy signals, came and threw back into the trend line, all right? Look at this. As this was forming up, coming in, look at the strength. Look at the amount of accumulation that came into this industry group. And again, we're getting close to a 100-day high on this, but we are in accumulation on this too. So we've got a pretty decent buy signal in the group right now. I like the group. So here's what we're looking at. April 13th was our high point in the cup and forming the handle. Here's what I'm looking at right now. Here's my key numbers I'm looking at on this that I'm going to be watching as this goes. One of the things I always like to do is draw that trend line across the tops right here. It gives me a key point to be watching, 66. We'll see what these different things go. You can see how this also works into my Andrew Pitchfork numbers. Up-down volume ratio on ESOP right now is 1.6, looking very good. All right. Here's an interesting one, just a fun one to finish this up. This one just came, I put this slide in today. This just came up today. And I talk about these 30 minutes, okay? And this comes up on my scan today. This A-Tour Lifestyle Holdings, ATAT, ATAT. This is in the Leisure Lodging Industry Group, which gave you a confirmation buy on October 31st, okay? And this was an IPO on November 11th. So from the daily chart, you're not getting a heck of a lot of information here. I put it in anyway because I wanted to show where my target numbers are on this. But guess what? Guess where this is setting up? This is setting up on the 30-minute chart. This is a 30-minute IPO setup right now. So we'll see what happens with this. But what makes this interesting is, if you may have noticed today, one of the big things going on today, and I put this past weekend, I put RLX in the newsletter, which is moving along here out of its base now. But one of the reasons it's moving along is because Chinese stocks are starting to catch fire right now. And this happens to be a Chinese stock. And again, setting up in a 30-minute base. Here, look at your accumulation on the 30-minute right now, 2.23. By the way, the daily accumulation on this is 4.1 right now. The 30-minute accumulation, which is what I focus on right now, and look at how it's already breaking. In this case, it's not 100-day, but it's 130 minutes. You're breaking 130 minutes to the high. You take out this trend line right here, and we're looking at these target numbers right here. Those are my next target numbers on this thing. And that's pretty much all I've got for you today. Check me out on LinkedIn, Twitter, or you can email me if you have any questions or anything, or you can even text me at this. And I'm going to turn it back over to Steve.
Great. Thanks, David. I appreciate that. And we'll get another session going again soon. Any questions, pop in the chat box, or questions for me, send to shill@aiqsystems.com, or actually send them to me, and I can always pass them on to David as well. Well, David, I look forward to working with you again in another session, probably maybe in January. How's that sound?
Sounds good.
Yeah, I'll talk to you soon.
All right.
Thanks, folks. Yeah, have a great holiday, everybody.
You too. Bye.
Bye-bye.